Okay, so what do you read into China's latest move? I mean, they've got to continue to juice their economy. Does this kind of sideline the fiscal policies they put in place?
Well, the economy is slowing down as there is rebalancing from capital-intensive and resource-oriented growth towards more consumption and labor-intensive growth. The slowdown, in my view, is going to be sharp because the real estate markets, housing and commercial, is in a significant downturn. Whenever that occurs, they get nervous. There have been also significant capital outflows, hundreds of billions of dollars out of China.
Right.
In part because
and this is one way to get it back in, right?
It is one way of actually helping the liquidity in the domestic market because the 7-day repo was sharply up because of the outflows. It was at 4.5%. So while easing monetary policy may weaken the currency, is going to reduce the pressure of liquidity in the financial system and the banking system. So it's one form of a monetary easing, gradual.
It is one form. Are they going to have to do more? I mean, is this one of several down the road, Nouriel?
They might do more. The trouble is that if they want to stabilize the debt ratio in the economy, is already 250% of GDP and has been rising, they have to stop doing what they're doing so far. That is, every time there is a growth slowdown, they do another round of credit-fueled fixed investment with more infrastructure financed by more easy money, and therefore they're delaying that the rebalancing is necessary. So that boosts growth in the short term, but the risk of a harder landing by next year or the following year becomes bigger. So they get always nervous when there is a growth slowdown rather than accepting the rebalancing. In my view, they should be using the fiscal balance of the government to help those who lose jobs when they do a reform of the state-owned enterprises, increase the debt to finance more consumption through unemployment benefits, rather than using the balance sheet of the government to boost further excessive debts, excessive assets, excessive investment. So in some sense, it's a policy mistake.